Happy Friday, guys. Welcome back to another video. It's your boy Stas here. Cheers, by the way. I appreciate you all for tuning in to another Sofi update. We're going to break down the charts, the options chain, go over what I'm looking to do there, and we'll break down where I see Sofi going in the short term, maybe some other stocks later in the video. But first, hit the like button. Do not forget to subscribe. Come on, follow along for more content and join the free email stock newsletter linked down below. I send out my top stocks for free right to your email. And with that being said, cheers again. Take a sip of your coffee and let's dive into it. So Sofi right now is down about 1%, trading at $13.12, and the entire stock market, for reference here, guys, is all over the place. The Dow's down 0.25%. The S&P's down 0.05%. The Nasdaq's up a little bit. The Russell's down a little bit. So it's not a crazy day in either direction. Just a little green, little red. The VIX is pretty flat. Little green for the metals as well. It's that kind of day. Oil's up a little bit. Crude oil's at $60 a barrel right now, back over 60 a barrel. So not a crazy day at all for stocks in either direction. And again, SoFi's down just about 1% right now as the stock is struggling to break out of the mid $13 range. We hit that point this morning. We double topped at about $13.50, which, by the way, yesterday we also double topped at $13.50 in Power Hour. Heading into Power Hour, we double topped there and sold off into close. We got down to about $13.25 at close yesterday, right? And again, now we're down to about $13.10, 15 cents as I'm making this video. So it's pretty clear that on this 5-day, 5-minute, the bulls are still in charge. You're noticing that. But it's also pretty clear $13.50 is a big resistance over the last couple of days. And not just over the last couple of days, guys. It's been resistance for a little bit of time here. We'll cover that as we pull the layers back even more. You'll notice, though, on the 1-hour time frame, we're still above the 180 SMA. We're still holding an uptrend. It's all looking nice and dandy on this time frame, right? And on the 4-hour, let me pull this up. You guys can see we're above the moving averages, and this is where you're going to notice, okay, 1350 was the high from the end of March. This is a big resistance, guys, not just from the last couple of days, but from a couple weeks/months ago. 1350 was a tough spot, which if we're able to break out of there, I'm thinking we initially go to about 1430 to 1450, which is where we were about a week ago after earnings. Then if that breaks, yeah, we could be going higher. But it's a waiting game. It's a patience game at this point in time. And by the way, the cup and handle that we called out on SoFi recently is still intact right now. You're noticing that. The cup, the handle, pretty textbook cup and handle right here. So we'll see if that plays out. And again, it all comes down to the mid-13s. If we're able to break the mid-13s, from there, again, 14 plus, no problem, is where I think we're going to start going. So let me pull up the options chain right now, show you kind of what's going on here, kind of what I'm looking to do. So as SoFi is kind of, figuring itself out in the mid-13s, it's kind of, at a big resistance, right? We might benefit here from selling covered calls, potentially, as it's moving sideways the last couple of days, as it's waiting to potentially break out here, right? So as we wait, we might as well collect some premium, right? So let's go over here to sell covered calls on Robinhood, which I actually don't trade on Robinhood. I just use the interface here for these videos because it looks nice, right? It looks pretty simple to understand. So when I'm selling covered calls, guys, I like to go out at least 3 to 4 weeks, right? Like we've covered in recent videos. So if I pop up these May 30th covered calls rather on SoFi, we can see the premiums, right? If I zoom in a bit here, we can see in 21 days, which is when they expire, May 30th, the $14.50 strike is trading for 21 cents right now. So 21 times 100, we would get $21 a premium here for just one contract, selling one contract of SoFi. $14.50 strike. Again, $21 premium. The $14 strike is $33 a premium. You guys can see $14 strike is trading at 33 cents right now. That's the bid price. So multiply that by 100, $33 right there. Boom. And if we go out a little further, let's see, June 6th, 28 days. Let's see what we're looking at now. So the $15 calls that expire in about a month, June 6th, they're, let's see, $20. Yeah, $20. So the bid price is 20 cents. Multiply that by 100. We're looking at $20 right there in premium for the $15 calls, or strike rather, for the June 6th expiration date. The $14.50 strike price on June 6th, you're looking at about 29 cents. So about roughly $29-30 in premium there for a contract. So I like to use the 1,000 share example. So let's say we have 1,000 shares of SoFi. We want to sell 10 contracts here. We're going to get about $300 in premium, for selling these $14.50 strikes, or the strike price $14.50, which expires on the 6th, right, of June. We'll get $300 in premium. Let's say we sold the $14 strike that expires on the 6th of June. We're looking at 43 cents, so $430 a premium. Now we're talking, guys. Now we're talking. So you'll see, or you get the idea here of how you can make some money by just owning the stock, putting your shares up for collateral, essentially, right? That's what I'm looking to do right now, as SoFi is kind of trading sideways, figuring itself out. But where it's risky, though, is if SoFi starts breaking out, right, and then we start going towards the strike price I sold the covered calls at, or even above that strike price, then I have to give up my shares, and I miss out on the gain above the strike price. But again, with how the stock's moving, kind of sideways here, I don't know. Do we end up completely breaking out before the end of May, early June? That's the $1 million question. And if we do trade sideways for the next couple of weeks, selling those covered calls would really make sense right now. And really, the reality is, man, we've been trading sideways. Other than that one pop to $14.50 right after earnings, which was short-lived. I mean, we popped to plus $14 for what? A day, if that. Other than that, we've been in the mid-13s, low 13s now for a good 2 months, right? So maybe selling calls is not a bad idea. Not a bad idea. So I'll keep you guys updated, of course, in these videos, and I'll post on Patreon for all my Patreon members the updates, right? I post my trades, my moves every single week on Patreon. That is linked down below, and so is the email stock newsletter. You might as well get in there, guys. It's free, and I send out my top stocks weekly right to your email. Again, that's linked down below. Same with the Patreon. And with that being said, cheers. I'll catch you in the next video.